All right, we are live for the Friday edition of the Mike and Mario Show. Excited to be back. Looking forward to connecting and talking about this past week's events as well as looking ahead as we get ready for that next Fed announcement in a couple of weeks. But anyway, Mario, how you doing, my friend?
I'm doing well, Mike. And what about you? How are you doing?
I am doing extremely well, apart from the weather getting a little bit chilly here, but I'll take it. But other than that, can't get no worse, man. Only can get better. So looking forward to talking about some events. Of course, right now it looks like the metal sector is doing extremely well outside of all the issues dealing with debt as well as what's happening in Japan and you name it. So I guess that's probably one of the most important subjects as of right now because it could be the front runner for more events, especially dealing with the contagion in the debt market because debt is having its woes these days. But other than that, let's jump into that, man. I'm curious to get your thoughts on that because you're, a bond expert, and so I want to definitely get your thoughts on how this could be a pivotal moment for what we're experiencing. But let me pull it up on the screen here. So, Bank of Japan loses control of the bond market as a new yield curve control ban breaks amid selling panic. Could this be a contagion to hit the rest of the world, Mario?
Well, about a month ago when they surprised everyone by lifting the cap for the 10-year JGB from
Mhm.
0.25% to 50 basis points or half a percent, I actually said that they're going to have to lift that uh, cap very soon because uh, all other government bond markets are, it's a bear market, so they can't keep that cap. So overnight, I think it went through like 50 basis points. It went up to 56 basis points, which
Mhm.
doesn't sound that much, but it is in terms of percentage and move. And what that does, that forces the Bank of Japan to print, to do more QE, to buy those bonds, to get the rate back below half a percent. And I
Mhm.
think they've done already almost $150 billion of QE since they had to lift that cap of 0.25. So what that's done is that strengthened the yen massively and weakened the dollar. Is one of the reasons why I think the precious metals are going higher as well, because the dollar is weaker, but also the euro and the pound are weaker versus the yen.
Mhm.
And yes, like you said, it could create contagion in all the other government bond markets, because in the last few years, the Japanese savers, they've been plowing money into treasuries, into European government bonds, UK government bonds, because they're getting better returns. But now with the yen strengthening
Mhm.
and their yields going up, they're going to bring a lot of money home. And yes, treasuries, that would be a problem, because the Japanese have just over a trillion in treasuries. They've already unloaded about 200 billion, and that could force the Fed to do some kind of not QE,
Mhm.
just to keep interest rates from rising. I know the 10-year yield has dropped a lot recently, but it could start rising very quickly. So um, there's an old saying, I think it was John Connolly, he was the Secretary of the Treasury under Nixon. He
Mhm.
was the guy as well that got shot with the magic bullet in Dallas. And he was at a conference in Europe when he was Treasury Secretary, and someone asked him about the dollar. He said, well, the dollar is our currency, but it's your problem.
Yeah.
So, the Americans are not usually used to currencies, because the dollar is king. But I think it's really important to look at what's happening in the currency market.
Yeah.
That affects all other assets.
Yeah. And I was through this article here, and the things they mentioned was toward the end about inflation concerns in Japan and itself, and the need they want to try to provide more for wages and things of that nature. So I'm assuming, are they having some inflation issues?
Yeah,
Like that's something I hear about much, but assuming that to why they're trying to, make
yeah,
some policy changes as well.
yeah. I saw a headline story this week. I don't know if you heard of Uniqlo. I think they're a big Japanese
Mm-mm.
clothes store, department store. They're having to raise salaries for people working there by 40%. And the reason that's happening is because the yen weakened so much,
Yeah.
and Japan is heavily dependent on foreign source of energy, because they're a mineral poor country and a very small country, of course, relative to their population. It's only, they've got 140 million people, and it's densely populated with very little resources. So yeah, the strengthening yen is going to help uh, get the price pressures down, because
Yeah.
their imports are going to be cheaper. But the problem is they depend a lot on exports. So their exports are going to become more expensive for people buying stuff from them.
Right, right. So clearly here's a little chart here, going back to January last year. So even though this number, is 4%, that's from what we're being told, even though we see the upward trajectory. So therefore, all that the extra yen printing has to go somewhere.
Yeah, I mean, and I would say that the Japanese, they probably doctored the CPI. So you
100%.
could probably add 1% to that 3.8, probably more like 5 or 6.
Yeah, man. So these guys are, all, every government, every central bank is all in the same game. I think just with the QE still underway in Japan, like it just goes to show, no matter how much time goes by, it doesn't work. It only causes more internal problems, and we're witnessing that right now. And so it's definitely going to spill out. And
Yeah.
so you're saying that the possibility of Japan entering more stress, needing to sell off treasuries, would be one more reason why the Fed would pivot, or do you think they're going to use an excuse outside of all the other economic factors that show that a pivot is coming? They're pretty much adamant that they're going to get to this next, and it's going to be a long drawn pause, supposedly, because they're making it. They're talking like they're not going to pivot no matter what, even if something breaks.
Yeah, I don't think they're going to pivot in the in how people used to look at
Yeah.
a pivot. They thought a pivot would be they're going to stop raising rates, they're going to cut, they're just going to start QE to try to get the stock market up.
Mm-hmm.
But I was reading the latest from Zotan, a Posar from Credit Suisse, and he seems to think that QE now will only be used to control bond yields, treasury yields. They're going to be just like the Bank of England did back in September when we had the gilt crisis. They stepped in, and then they stopped, and they calmed the markets down. But it just goes to show that they have a problem that is an intractable problem, and they're going to pretend that they're going to be tough, and that they're going to keep rates high, that they're going to keep doing QT. But at the same time, it's going to be like a fireman is going to come out sometimes and do a bit of QE just to put to stop a crisis, because you sent me something about the U.S. budget deficit for December is the highest ever. So they can't afford to let government bond yields to rise too much, because those interest payments are going to make the debt and the deficit, and then the debt even worse.
Yeah. And speaking of which, I'll pull an article up here, but here's another little headline that caught my attention. It says the days of giant rate hikes are surely past, Fed officials, but they won't be cut anytime soon.
Yeah, they could be wrong, because about 18 months to 2 years ago, they were saying that they didn't see any rate hikes up until 2024. And
Right.
here we are in 2023, and they've had to raise. So just like they were wrong then, they could be wrong about that as well.
Right. And that's the thing. There's always unforeseen events or market activity that they have to try to navigate or to control that forces them to have to respond in some unforeseen manner, or predictable manner, rather. Let me find an article real quick about the Fed. I thought I had it up here because it was a very interesting article, but the debt is always going to be a problem if I can find it, but give me a second. I don't know where it happened to it. Let me grab it real quick, but I thought it was a very good article. We'll skip it. We'll come back to it. Speaking of which, central banks taking on debt, and they're all underwater for the most part. Everybody's underwater. Everybody who's went through an interest rate binge, they're all, for the most part, the assets on their balance sheet now is basically sucking hot air. And it's going to ultimately, it's reflected in the currencies, of course, because they're going to have to do more policy implementations to try to navigate that. But with Switzerland, we got Canada, Australia, the Federal Reserve.
Yeah,
So,
Bank of England, they lost 11 billion last year, and the Treasury had to cover that, which means the taxpayer. Yeah, the problem is that with QE, these central banks, they bought loads of government bonds,
mhm,
mortgage-backed securities. In the case of the Swiss National Bank, because the Swiss government doesn't borrow that much, is actually quite their debt to GDP is below 50%.
mhm,
So they had to go and buy other things. They decided to buy FANG stocks. So with the Nasdaq being down 30% in the last 12 months or so, their balance sheet is suffering,
mhm.
not just because interest rates are going up and government bonds are going down, but because stocks are going down. But yeah, I expect these central banks to have to, yeah, well, there's a few things they can do. The one is letting the price of gold go up because a lot of them hold gold, and that would reliquify their balance sheet.
Yeah.
Uh, or the other option, which I think would be very politically difficult, is for the treasuries in these different countries to make the central banks whole. But that would mean taxpayers covering losses for central banks.
No, we should make themselves whole. How so?
Well, like late last year in the UK Treasury sent 11 billion to the Bank of England because they had 11 billion in losses on their
Mhm.
balance sheet. So the taxpayer funds that.
Mm.
I'm not sure if that's going to go down well
Yeah.
with the public, though.
Yeah. Yeah, that'd be a far stretch there because I would imagine before we get to that point, they're going to try to ride out this current wave of just allowing their balance sheet to go negative until some type of next event. I always, based upon prior events, look forward to some type of unforeseen event. Just like the health situation came about with the repo market for the bank. We know the sequence of events.
Russia. Yeah. Did you notice recently we've had this in the US this week? We had that FAA glitch,
Flight situation, yeah, yeah,
cyber situation.
yeah.
Uh, and then in the UK, we had the Royal Mail International,
Cyber, Royal
yeah,
Mail, yeah.
cyber attack. It looks like they might be preparing us for Klaus Schwab's cyber pandemic. And believe it or not, when I heard about the Royal Mail thing, I thought, oh, they're going to blame the Russians. And
Mhm.
lo and behold, today I saw an article saying that the cyber attack on the Royal Mail was Russian linked. So
Mm.
they can always use an excuse.
Yeah.
Taiwan as well is back in there's a lot of saber rattling.
Mhm.
I saw that the U.S. military in Japan, they've done the most exercises along with the Japanese
Mhm.
forces in years. Because of Taiwan, they think that China wants to invade Taiwan, and I think the Japanese they're starting to spend a lot on their military as well.
Yeah. So we have so it just seems like, we're only 13 days into the new year, and based upon all this debt issues as well as the political chaos happening here, that we're probably drawing near to some type of event headed to the spring. And so as of right now, with the Fed, all their jawboning, anticipating a quarter. No, it used to be a half, but now it's a 1/4%.
Oh no, it used to be 3/4. Do you remember they did three
For
quarters?
February?
No, they did last year. They did a lot of rate hikes of 0.75
Correct. So,
four, and then they lowered it to 50 the last one.
correct.
Now they're already talking about 25 in February. Yeah.
Yeah, and so the 25 being set up for being the last one and during this cycle, and then that pause or whatever takes place. And so yeah, it's
But
going to
they
be
could do I think they might do a couple of 25s. That's what they're probably looking to do. Yeah.
so that's going to take us to what, 5.5, give or take,
Yeah, 4.5 to 5. Yeah,
four and a
something
half to
like that.
five, and then we'll see what happens. And it's always that lagging. But then again, with the CPI figures coming out right now, 6.6, which was a relative surprise. And so, do you see? I guess whenever the next CPI figures come out, based on the current trajectory, will it be beneath the current rate if we are at 5 at that time? And
Yeah.
they say 4.4 is something.
Yeah, we could get to a point where the Fed funds rate is pretty much the same as the CPI rate.
Yeah.
But if you look back at the 70s, Paul Volcker had to let rates go to 20%
Hmm.
in order to stop the inflation. And at the time, the inflation rate or the CPI was 13%. So that was a positive 7%.
Hmm.
So I don't think getting back to like flat, in terms of CPI and the Fed funds rate
Yeah.
is going to do anything in the long term. In the short term, I think people will be cheering and saying, yeah, the Fed's, mission accomplished,
Hmm.
so to speak, a bit like
Yeah, but
Bush.
that's the thing. Like mission accomplished as well. It'll still be well beyond their 2%
Oh,
mandate. You know
super,
what I'm saying?
yeah.
And
And
so,
I think Wall Street and the mainstream economists and the people at the Fed know that if they try to get the CPI or PCE back to 2%, it's
mhm,
going to cause a huge problem for the markets, for the economy. So they're trying to say that, oh, we have to basically be happy with 3 to 4% CPI or inflation. And but if you think about that, 4% over a decade of 15 years, the value of your purchasing power is halving. So
yeah.
that's what they're going to probably do. And people are going to be UP. They've cut the inflation in half, but it's still the inflation is still there. It's still growing. If
Right.
they really wanted to cut all the inflation they created, I would say the CPI needs to go deeply negative
Hmm.
for many years,
Yeah.
but they're not going to do that.
Yeah. That's deflationary in nature, and that's not going to happen. That'll completely ruin their whole Ponzi scheme of an expansion of the monetary system.
Yeah, in a Ponzi scheme, you need to keep the money coming in. And actually, talking about Ponzi schemes, I don't know how many of you have Netflix, but I highly recommend Madoff, The Monster of Wall Street.
Okay.
It's a really good documentary. I watched it this week, and
Hmm.
it reminded me very much of the our monetary system because he used to like tell his big clients when they wanted to get money out, he would say, "Oh, if you take your money out, I'll never let you invest again." He tried to keep people from taking the money out,
Hmm.
and it reminds me of our system. They try to keep you in that game. And he was the same. And the thing is, people say, well, but the fiat currency dollar has been going for a long time. It
Hmm.
never collapses. But Madoff's Ponzi started actually, if you watch that, it started back in the early 60s. So
Really.
it went on for like 46 years.
And
So,
all the regulators knew about it. All and they said
oh,
they
the
all
SEC,
were in on it.
the SEC dropped the ball massively.
Hmm.
They were warned since 2000 by a guy called Markopoulos. He worked for like a hedge fund in Boston. He
Hmm.
tried to warn them several times. JP Morgan, they could have warned the SEC because there were billions of dollars flowing through his personal account or
Hmm.
the Madoff company account with JP Morgan. But yeah, JP Morgan was fined 2 billion for it.
Hmm.
But no, I highly recommend people watch that if they can.
Interesting, interesting. So somebody in the chat mentioned about the Davos meeting. So yeah, we're definitely. I saw a couple interesting thoughts on that about what was being discussed there, and of course, it's all about the World Economic Forum's
Yeah, I
agenda.
think it's starting next week, isn't it?
Yeah, so some of the, I guess the pre-talk is very interesting. Things they're gonna be
Yeah,
talking about.
and even the Swiss Army, they're going to be brought in,
Yeah,
5,000 soldiers.
yeah.
I'll tell you an interesting thing about the Swiss Army. Uh, when you're in Switzerland, everyone that when they turn, I think, is 18,
Mhm,
they have to serve in the army
mhm.
for until I think it used to be until they're 50, and you go every year for 2 weeks. So almost every Swiss, it's like the militia. Every Swiss uh, male is
Mhm.
part of the army. Yes, there are some exceptions, But it's interesting that they have to bring 5,000 soldiers. They must be worried about something
Right. What
because
exactly are you
I mean,
protecting yourself from?
oh, I think it's because people have woken up to the World Economic Forum,
Hmm.
and
Hmm.
maybe 5, 10 years ago, people couldn't care less, but people know what they're all about now.
Yeah, very true, very true. So let's see, let's look at the metals activity a little bit. Since we were in the green, it looks like so we got 1914. So it looks like based upon all the errors of the monetary policy and fiscal policy around the world, there is a rush in to get physical right now. And I think
Oh
this
yeah,
year we're just starting.
yeah. The central banks last year bought the most gold since
Hmm.
1967, and I saw Rafi noted yesterday, Rafi Farber, that
Hmm.
someone bought January futures on COMEX for
Hmm.
gold, which
Hmm.
is usually you don't do that because you only do that if you want to take delivery. But they took the delivery and was $215 million worth of gold, and they don't like doing deliveries on COMEX,
Hmm.
but it must have been someone, with a lot of money. They
Right.
didn't want to uh, piss the big client off. But the thing that I'm noticing as well, and I talked to you about this earlier, and I'm going to share this. Hold on, where is it? Is that the same thing is happening with? Hold on, Mike.
Well.
That's it's not only going up with the against the dollar gold,
Mhm.
it's also with other against other currencies. And I follow, of course, the British pound price of gold quite closely. So you can see here. Sorry about that. So there you go. This is a chart going back to 2013,
Mhm.
and this is a weekly chart. So it's 5:20 p.m. here in London. So it looks like we're going to have the highest weekly closing ever. So it's just about breaking out. And also, can you see this one? Is this the euro now? Let's see. Let me share the euro price. Hold on. And the same thing has happened to the euro, but maybe
We still
uh,
got you
let
doing
me share the other one. Get the euro. So there you go. There's the euro. Euro is also 1770.
Mm.
It's above this 1750 level. And I spoke about earlier, that Americans, and it's only because the dollar has been like the top dog. They
Mhm.
couldn't care less about other currencies, and I understand that. But now currencies are becoming more and more important, and I think what that's showing is that gold is going up, not be yeah, partly because the dollar is looking weaker,
Mhm.
but it's going up against all other currencies,
Right.
which means it's a currency move. It's not a move about inflation right now. It's a move
Right.
about people getting away from paper and going into the money of kings.
Right. And speaking of which, here's the dollar, the Dixie. As of right now, it's trending downward. It looks like, and so we're at 102 right now from
Yeah,
a peak of 114. What was that back in October-ish? So
yeah.
it peaked September 23rd. So confidence, man, confidence is winning, and people need to run for safety, fight to safety. We're witnessing a global fight to safety into real and tangible. Of course, money has always been and will always be. And so it's interesting how this week, where just based upon the little bit of news we got, there was a rally, and I call it a fake rally because even cryptos decided to catch a little bit, and there's a lot of excitement. And so clearly, to me, that's not a genuine movement, just because the CPI figures came out a little bit low. So all of a sudden now it's a reversal in the equities markets. Like, come on now, something is up here.
Well, the CPI number was pretty much in line, but
Hmm.
like I said, the stock market doesn't have that wind behind it. You
Mm.
get a rally one day and the next day it goes down, or even intraday you see a rally and then it fizzles out. I think the same trend we had last year of the stock market not doing well and then
Hmm.
commodities doing well is going to continue. Bonds are the only thing that are doing well right now, but government bonds. But I don't think that's going to be very long-lived.
Yeah, I wouldn't put my hope and confidence in those things. And so, especially with the overall investment strategy last year being the worst for the 60-40 split, like that's not
Yeah.
going to improve no time soon. So, yeah, invest at your own risk if you're playing the games in those departments there. All right, what we got here? We got a couple more topics. I think I do. We can probably pull up a couple more. But if not, we can get to some questions. I'm curious to hear what else is happening out there. Let's get to some questions. And
Sure. Let's see what
so,
we got
for
here.
those who are tuned in, if you haven't already, hit the thumbs up button, but then feel free to throw out some thoughts, questions, or whatnot.
Niels Han Dynasty. Why do you think Poland supports Russia now? Yeah, I mean, I haven't been following too much the geopolitical situation. I think though Ukraine is like situation doesn't look good for them, and I saw that they're going to train the Ukrainians to use the is it the Patriot missiles, but it's going to take like 3 months to train them. But I think by then it's going to be too late. And maybe Poland is, I take you. Maybe Poland is switching sides because they know that Russia is gonna be come out on top. And I'm not being pro-Russian or anti-Russian. I'm just looking at the facts.
Speaking of which, here's a supporting Ukraine in that whole narrative. It looks like if I can get my mouse going here, I want to share something with you real quick, and then Chris will get to your question. It says Canada to buy 406 million surface-to-air missile system for Ukraine. And what's interesting about this is they don't even have the type of system themselves. So the country of Canada does not have a surface-to-air missile system. Huh?
Are they going to buy it from the Russians?
I don't know, but I saw this, and one of the points was that Canada themselves don't even have one of these systems, but they're buying one for Ukraine. And so I thought that was comical in nature. But anyway, it's Chris to get to your question, man. Appreciate it. Says, wait, what point will the true price start to show for precious metals with the constant drain of the COMEX and LBMA? Thanks. Great question. So that piggybacks on a question I wanted to ask you, Mario, reference to what you said about Rafi. And so it said it's not typical for people to take out such large orders for withdrawal purposes in January. And so if that is the case now with one already occurring this current month, say with one in February and start picking up, could that then be the excuse they would need to rewrite the rules of the game and say that we're no longer doing physical deliveries, only cash settlements or something like that? And also to Chris' question as well.
Yeah, they could definitely change the rules, but they will lose all credibility because even though, and I worked in the futures markets, not just in precious metals, but government bonds and other things. And very rarely did clients take delivery of bonds or gold or silver. One time I asked my boss, because we had a client that liked to trade gold and silver. And I said to the guy, why don't you think about taking delivery? And I talked to my boss and he said, don't even think about it. So the COMEX is more of a mechanism to control the price. So yes, if we see next week, we're still in January, we could go to COMEX and buy a January future and demand delivery. All we need is $190,000 because the contract is 100 ounces. I say all we need, but yeah, they probably wouldn't deliver it to like someone, a retail client. But my feeling is that this is like a big a hedge fund or a wealthy, high net worth individual that did that. So, but it might lead to COMEX changing the rules, like you said, if it becomes a big thing, if people keep doing that every day until the end of January, which I haven't seen, but they could do it in February as well, when the February contracts becomes what they call the spot contract.
So I would anticipate more of that type of activity happening than not, especially as more central banks as well as investors look to get into the physical, get out of this all paper crap.
Yeah.
So
because someone who's got like, I don't know, a couple of $1 billion, there's quite a few people with that. they're not going to go to their local coin shop. They're going to go to Comex and take it there. It's much more convenient.
Yeah. Here's a question here. Says, question: if you could have anyone from history on your show, who would it be, and what would be your main question? So I'll just, I'll turn it into who would I want to interview. So who would I want to interview? Anyone from history. Let me think on that one. Mario, anybody come to mind? Anybody you would want to interview?
I don't know. I mean,
that's a stumper right there.
Yeah.
Oh man. Pagan Warrior. I'll try to come back to that one just because I got to put some thought to it. Maybe something to come in a minute.
I don't know. Yeah.
Yeah.
Or it could be anyone. It could be just a common person, and you interview them, someone back in the early 30s, and you ask them about the gold confiscation, something like that, and what they thought, if they, if they realized that it was such a huge step, in the long term for us, or something like that. I guess you could pick like a famous individual from history, like Napoleon or Abraham Lincoln, or
I got it, Mario. I got who I would definitely interview Jesus Christ. You know what I'm saying? Like, I would love to have him on the show.
What would you ask him?
Are
you long silver?
My biggest question would be, in the millennial reign, during that 1,000-year period here on the earth, when he is established as the actual physical king, what will be the monetary system? What will be using gold and silver or some type of other? So that'd be one of my first questions. It doesn't matter in this life here, but for the next, it definitely does matter. All right. Somebody says Janet Yellen. Hagen says, question as silver is money and used more. Can you see silver ever being priced more than gold? Not really. I always wonder about the ratio. Like, I hear people say that we could actually get to a 1-to-1 ratio price wise, but as far as silver being priced more in dollar terms, especially, I don't see it.
Anything's possible, but for the last couple of thousand years, gold has always had more value than silver, i.e., you can always get more than a gram of silver with a gram of gold or an ounce of gold. It could get near to 1. I mean, historically, I think the ratio has been around 15 or 16 to 1.
Yeah.
So we're definitely undervalued now, silver, I would say. And I think silver, there's the saying that gold is the money of kings and silver is the money of gentlemen. So I think it's a thing still, silver. I wouldn't write it off.
Yeah. Here's Norm says, I think the U.S. is using Taiwan as an excuse to invade when China announces their gold-backed currency.
Well, I think it's probably also an excuse to cut off the Chinese from their foreign reserves, like they did with the Russians. So, and I think that's why the Chinese are starting to buy gold. Chinese have
been buying gold.
They have 900 billion in treasuries. The Russians had 400 billion in foreign reserves. So, yeah, it's an excuse. Also, I think it's also very strategic because if China takes over Taiwan, they control that sea passage there to the Straits of Malacca, and then to the Indian Ocean, and who controls the sea, the sea routes controls the world, so to speak, and the Americans are still controlling that. The U.S. Navy and even the small Royal Navy that we still have here in the UK is part of that.
So while you're talking, I thought I had a thought in reference to that question. I pulled up an article here about that. And this is from last year in October. It says, but October 29th, it says Russia and China may be preparing new gold-backed currency, but expert assures U.S. dollar safest currency today.
Yeah, I think I remember that. That was July 2022.
Yeah, so they initially mentioned, I think
So
in June, they
where
initially
was
mentioned, Putin
where?
mentioned something.
Let's have a look where gold was then, because that guy said the dollar is the place to be, right?
Yeah.
Where was it in July? Uh,
Let me got it up here too.
oh yeah, it was at 17. It was trading around 1720, 1750. So yeah, that's someone who doesn't understand money, I would say, even though he's called an expert.
So here we have current, like this is the
Yeah,
last year.
July, and there you go. It was trading around 1700.
Hmm. So yeah. But yeah, we got a little ways to go, but it's trending upward, that's for sure. All right, what else we got here? Let's get some more questions. Ask when people throw silver into the street so I can be ready. Oh my goodness. It says, are things getting better? Better in reference to what, Ed? Overall, I would say that it all depends on your particular situation.
Yeah,
And like you're just, you know what I'm saying? Like I speak in reference to the financial sector. When it comes to the current activities surrounding metals, I'm extremely excited for this year when it comes to metals and possibly even some little bit in the crypto space. But on a political front here in America, I am more concerned because we got the debt ceiling debacle coming up, and our country's never been more divided that I'm aware of. And DC is about to be a crap show because the House and Senate is about to completely just, yeah, the government's gonna be a government shutdown this year, all types of chaos coming. So I mean, it depends on what you mean by get better. So
yeah.
yeah.
I mean, on an individual basis, you can always do well,
Right.
even when there's chaos, if you're on the doing the right thing. And I think that's how we should view things. Am I
Mhm.
saying that we shouldn't try to expose what's going on? Of course, but I think trying to accumulate gold and silver and not feeding the beast is a good way as well. And I
Mhm.
know we're only a few thousand people, but if we get the message out, it becomes harder and harder because I know it was Alan Greenspan who said this, but he said, you know, gold and sound money is the enemy of statists.
Mhm.
And that's the problem right now. Government is too big, not just in the US, but in the UK, in Europe. So if we get this message out there of sound money, I think it's a good way of going about it.
Yeah.
Because a lot of times, if you try to go directly against your enemy, they'll crush you. You know,
Right.
they'll turn you off and they'll
Right.
eliminate you.
Right.
So
And speaking of which, this is off topic, but it was one of the subjects of things getting better. But at this current moment, it could be too late for not the majority, but a small minority. And this happens to be around, the BBC article or BBC video you shared about how more
yeah,
people in the professional realm, even the experts, are now speaking out,
yeah,
suggesting that experimentations are causing the problems.
yeah.
And so
And
that's a
even
positive thing.
the big thing about this is that the BBC has let him on,
Mhm.
which is a big thing because
Yeah,
BBC is like the British brainwashing corporation.
right. And usually in times past, they would usually censor stuff like that and
Oh, yeah,
cancel it, and you've been gone quick.
they wouldn't
So
have him on.
we'll see. And another thing could be, which make of it what you may, but with the House of Representatives talking about abolishing the IRS, that
Yeah,
right there
I
was going
saw
to be
that
entertaining.
story. I don't think that they might get it through the House, but unfortunately, not. I think it's they want to like undo those 87,000 IRS agents that they wanted
Yeah,
to.
the
I
70
don't know if
billion.
they
Yeah,
want to abolish it, but I don't think it will go through the Senate. And even
it
if it
won't.
went through the Senate, uh, Brandon would like
He
veto
already
it.
said, yeah. I saw today Biden say he is dead on arrival if it was to get to him, but the Senate
Yeah,
already shot it down. But
yeah,
somebody mentioned more so it's not about abolishing the IRS, but it's more so showing how Democratic agenda is more taxation rather than easing the people's pain, especially at this current moment
oh yeah,
of all uncertainty in the economy. And then speaking of which, you shared that this right here, I'll share with you about you guys probably more stimmy checks or UBI coming soon. Let me grab this real quick here. Jeremy Hunt.
Yeah, he's the
Talk about supporting families.
he's the equivalent of the Secretary of the Treasury, the Chancellor. Yeah.
And so this is talk about the need to provide 3,500 support for every household over the next year and next. And so, like this type of talk here, it just shows how much government is literally trying to talk the narrative of fighting inflation, but then again, they're doing everything needed to continue to expand the monetary supply.
Yeah, it's quite Orwellian, because he says, "Oh, we're going to have inflation," and then he says we're going to give every household £3,500 every year, which is inflation. So
yeah, that is what we should expect more of, agendas to promote stuff like that. So
Carlos Garcia. Oh, sorry, I'm missing.
Go ahead, Carlos. What we got?
He's got a question, maybe, or is this a comment? Maybe
they need an event. I shut down for 2 weeks. Set goals to explode against real assets. Maybe
they could do that. They lock us down. They shut the internet, and then everything comes back online in 2 weeks, and the gold price is like double what it is now. Mm-hmm. And if you haven't got it now, it will be very difficult to get it then.
Yeah, what else we got here? Listen to me. I said gold is going nuts. What's going on? Gold is going nuts. Is it something happening right now? Let me check that out.
We're near the highs of the day. We're at 1915. The high's been 1917. I mean, it's about time it goes nuts.
Yeah.
I mean, there's an old saying in the markets. People used to say, "Oh, why is this going up?" Mm-hmm. And the answer would be, well, there's more potential buyers than sellers. Mm-hmm. Because there's always the same amount of buyers and sellers, but the reason that something goes up or down is that there's more people willing to buy or to sell. But I think, joking aside, I think what the rise in gold, gold has risen about $300 since the low, like late last year at 16.15.
Yeah.
And I think it's because we've seen the Fed go from raising rates by 75 basis points to they're probably just going to do 25 in a few weeks. And the ECB and the Bank of England's other central banks, they're still like raising by 75 or 50. So the Fed has gone from being the most hawkish central bank to becoming less hawkish. And I think that's one of the reasons the dollar's weakening and gold is going up.
Yeah. So pay close attention. More things are happening. What's that?
Neo says gold at 1924. Well, you're looking at the futures there, Neo. The spot price is actually trading at 1916. So so the spot price is like the price that for immediate delivery or 1 day. Yeah.
I'm looking forward to the day when I see $30 silver again.
Yeah.
That's when I'll get beyond excited.
Silver is having a tough time, but it's trying to break out now. It's trading at 24.20. So it's up 1.78%. But it's, like you said, it's still it should be more like $30 or $40 at least.
Yeah.
So the thing is, you can't, like here in the UK, the price of silver is around £20, but you can't buy silver for £20. You got to pay a lot.
Right.
And I think the same thing goes in the States. You can get some stuff at like a 10% premium, but a lot of it is pretty high premium. I don't know.
Right.
What are you seeing?
Right. The lowest I've seen is 10%, and that's just on some base, generic silver in general. Eagles premiums, I haven't bought no Eagles in a minute, but they were 75-80%. You know what I'm saying? Easy. And so remember, Silver Sunday is $30. So other than that, it don't really matter how much it is. I'm still gonna buy it anyway. Yeah. So that's one of the things irrelevant at this current moment. But at some point, it will be very nice. Last week back in time. Okay, here's another from Pager Warrior. It says last week you went back into time. This week go forward. What one thing you would bring in to hopefully make the future better? What's one thing you would bring into and to hopefully make the future better.
Sound money?
I would definitely address our governance crisis. You know, like at the heart of everything, all governments around the world are conspiring against American or against their people right now.
Yeah,
I would
but
do
it's not
something
only-
to
yeah.
rat them people out, expose them. You know, we got to see some people tried for treason. You know what I'm saying? Like we got to see some justice of some kind in his life is what I would work towards if it's possible. But yeah, that's just me.
I don't even think it's just government, though. It's also the big corporations. They're working together.
Right.
You know,
Right.
Klaus Schwab calls it the public-private partnership, and or you know, he uses another word as well. But you know, even if governments, for example, aren't able to pass laws that we don't want to follow, corporations will. They will impose it on you.
Right.
And and I think they have a lot to answer for, because they're not supposed. You know, corporations shouldn't be involved with government.
Right.
You know, that's the definition of corporatocracy, or fascism even.
Yeah. Yeah. Let me see. I don't see more questions. Well, about 45 minutes. All right, we can get ready to wind up, I guess. Looking ahead, we're almost halfway through the month. What are some things, of course, other than the Fed, you know, to get next month? Anything else brewing on the horizon people should pay attention to that you could think of?
Yeah, keep an
next
eye.
week got the Davos situation. But anyway, go ahead.
Yeah, keep an eye on the Bank of Japan, you know, and the Japanese bond yields. You can find the bond yields there by going to investing.com, and you go into the bond markets and world government bonds, and you can keep track of the JGBs, what they're doing. And if the 10-year JGB is above 0.5, you can bet that there will be trouble in all the other markets.
Yeah, so speaking of which, I was looking at it before we went live. So we have. So I think next Wednesday as well, they're having some type of emergency meeting or some type of meeting to address this. So we'll see.
I mean, overnight, you know, from Thursday to Friday, that rate went up to 0.56, which is a no, and the Bank of Japan had to step in and buy.
Yeah. Okay. Yeah. So basically counterfeit. All right, people. Well, other than that, weekend's coming up. Yourself, stay out of trouble. Do the best you can for the moment. Of course, find ways to love on people, to continue to be generous. You know, this is a good time. A lot of people might be going through some going through things. So find a way to be a blessing. It'll do you some good, I believe. But all right, Mr. Mario, as always, good to connect with you. And we'll be back at it next week. Same time, same place, Lord willing. Other than that, see you guys later. Peace.